Welcome back to BitLab Academy daily streams. It is Saturday, July 14th, 2023. Whether you're watching this now or in the future, it's okay. We are going to be talking about the price action of this massive pump that we just got. But more importantly, what we're going to be doing is we are going to be going over how you can utilize the strategies that signaled that you could have, that there were signals that were there that you could have taken advantage of. There was data available to you. There's always data available to you, as well as every other investor, every other trader, so that you can take advantage of this market in the most profitable way. So whether, again, if you're watching today live or if you're tuning in at any point in the future, this video is meant to be evergreen because I'm going to be breaking down strategies on the charts, strategies with technical analysis, some strategies with some other different data points that you can take advantage of and utilize. The problem with most traders out there, problem with my own trading strategy early on, and even still, is that there is a wealth of data available to us all the time, and everybody really has access to that data. The difference between a good trader and a poor trader, or somebody that's an ineffective trader, I should say, ineffective investor, is being far too tied to emotions, being far too data agnostic. There's so much data available to us. Now, the flip side of that also comes with the caveat of, with all this data available to us, you can also drown in data. So we got to really figure out what's the most useful data that we can utilize so that we can make profitable trades consistently over time and do what we want to do in this, this huge market that's only just begun. Take advantage with Bitcoin and crypto and diversifying your portfolio and making sure that you're getting out near tops and getting in as close to the bottom as possible, but never chasing, never waiting for the specific bottom, but finding those regions and those signals and those data points so that you can be a profitable trader over time. My name's Kelly Kellum, and I wanted to say thank you so much, everybody, for tuning in here at BitLab Academy. We do this Monday through Friday at 10:30 a.m. Eastern Standard Time. I am trying to do, especially as we get this going, I'm trying to do as many Saturdays as possible as well, doing a mid-afternoon stream like we are right here. So tune in as much as possible. Make sure you go ahead and hit that subscribe button down at the bottom. It really helps build this community. If you're here, especially at this stage in the bear market, which hopefully we're pushing our way out of, and we're going to talk about that a little bit today as well. But we want to be able to really build a community from the ground up and have the right people in it. And the people that are in this in the market still right now are the type of people that are people like you that are going to make it because you understand what this market means. You understand what blockchain and Bitcoin, what it can do for self-sovereignty, for financial sovereignty, for financial freedom. And the best way to do that is to understand how to navigate the market. So why don't we just go ahead. Again, I just want to say my name's Kelly Kellum. And before we do get started, I do want to just point out here on the bottom of the screen right here, all the different socials for BitLab Academy. Make sure you're following the correct ones. There's a lot of people out there that impersonate and scam profiles, and we want to make sure that you're safe. So go ahead and follow that, and you can follow me at Kelly Kellum. But I'm just going to go ahead and dive into the charts here for a little bit. Actually, just to the screen, there I am, doubled up. All right. So here is the correct Twitter profile. Here is the correct Twitter profile for BitLab Academy. Make sure you're following this. I'll be posting stuff as often as possible, me as well as some of the other people on our team here at Hit Network. And we want to make sure that you're following the correct one so that you can take advantage of some of the stuff we're posting. Also, watch this video at the top. This video it's just a quick 2-minute video that really shows everything that's coming to BitLab Academy, which is the actual members academy that we have at bitlabacademy.com, which I'll talk about briefly here in a second. But there's so many different, look at all these different courses, 25 new courses, 200 new lessons. There's everything that's that you can imagine involved with Web3, blockchain, Bitcoin, NFTs, trading, investing, everything that you can imagine in here, everything broken down into very focused material. And that's all these new courses and lessons will be rolling out very soon. We still have a wealth of stuff that's currently in there, so definitely take advantage of that. Check out this video on the top of the BitLab Academy YouTube. And also make sure you're following the BitLab Academy Instagram. It's at Academy BitLab, just like the BitLab Academy Twitter, which is at Academy BitLab. And then, of course, I'm the host here at the BitLab Academy YouTube. So go ahead, give me a follow as well. I post so much stuff. I mean, I practically live on Twitter these days, and I'd love to, I'm very open to communicating and talking. So if you do shoot me a message or a DM, please be patient. I do try to get back to everybody. Make it a meaningful question if you can, because as I'm sure you are as well. We're all very busy, and I'd love to engage with you as much as possible. But let's do it on a meaningful level, not just asking me what color my pants are. You know what I'm saying? So. This is my BitLab account. Sorry, this is my Twitter profile. I also do a weekly podcast called Crypto Answered, and I have some of the best, smartest minds in the game, and I bring on. We have 3 or 4 different panelists, and we also do a bit of an AMA with the audience in there. This is hosted through Twitter Spaces, so you've got to follow me here on my Twitter to get involved in that. And then, of course, we release that also as well through iHeartRadio, Apple Music, Spotify, all those things. So the last thing I just do want to shout out is BitLab Academy website. Definitely go give that a follow. Sign up for the newsletter here. Everybody that signs up for this newsletter is also going to be entered to win 5 different chances to win free lifetime membership access to BitLab Academy courses. And that's going to be announced the week of January 23rd, I believe. But in addition to the being entered, you also get access to this weekly newsletter. I send out different training stuff, some signals, charts, TA, whatever's going on in the markets. I try to sort of highlight some stuff on TA, as well as update you on what's coming to BitLab Academy. And then along with that, you can also have access to the BitLab Academy Discord, where we have all kind of different channels here, TA, one-on-one stuff. I mean, there's just so much stuff in here. And you can also even follow this. You can also follow this. I'm going to post this in the chat right here. I'm going to post this in the chat for all of you. You can join for free. There's limited access, but there's quite a bit of stuff in there as well. So you can go ahead and join that free there. Today, as I said, is January 14th, 2023. And I do want to say one more time, if you are watching this live, welcome. Thank you so much for being a part of this show. Thank you for being a part of this community. Thank you for tuning in live and engaging here in the chat. And also, if you are watching this at a later date, don't worry, the date doesn't matter. I'm going to break down some of the stuff that is in the charts today and yesterday and everything that's going on. But I'm going to use that as well as many other time frames and past examples to really show some strategies, tools, tips, and tricks for how you can really engage with this market, so you can forecast and read the data and understand that there's something brewing before it pops, so you're not trying to catch something at the top or trying to sell something at a bottom. So without any further ado, again, thank you so much for tuning in. My name is Kelly Kellum. I am your host, and I cannot wait to continue building this community with you. So thank you for being involved. Let's go ahead and dive into the charts and see what's going on. So first things first, this is where we were at yesterday, and I actually posted this yesterday morning before this massive sort of uptick that we had on the charts, which is, I'm going to come here to the 4-hour. This is the uptick that I'm talking about. How do we get involved in this, where we see all this flat sideways action? How do we get involved with this without getting scared out? How do we understand that this is likely to happen? And if it does happen, how do we engage with this without, getting a pump and selling, where we could take the most advantage of everything that's going on with this upward price action? Well, the first thing I want to do is I want to go back to this chart that I just shared, which is right here. This is the first step first, no matter what you do. And I went over this in yesterday's lesson, which is available still. If you go to the live playlists on the BitLab YouTube, I'll also put a link to it at the very end of this video. But I did a whole video stream that was lessons essentially about how to understand where we're at in the market and how you can take most advantage and what the action is depending on where you're at in the market. But just to sort of highlight that again, I really broke down, and I want you to refer to this as regularly as possible. I really want you to understand where you're at in the cycle, but then also knowing when you think the word cycle, you're not thinking the cycle like just macro or just right now in today's trend or the 1 hour or the 4 hour, whatever it is. I want you to really consider every time you hear the word cycle, you ask, what's the macro, what's the midterm, and what's the micro? The three things that are most important for you to navigate this market. So, because this cycle, this pattern, this cheat sheet that I've outlined here, and I posted this April of 2022, this is relevant in every asset class. This is relevant in Bitcoin, Ethereum, Cardano, any crypto, any stock, because market cycles tend to take a similar trajectory. And it's all based on something I want you to really understand when you're thinking about what's happening on any chart. When you're looking at these candle patterns and trying to figure out what's going on, where's the price going, I want you to remember, you thinking that is an engagement to this market that is absolutely the same as every single other market participant that is in the market, in that asset class that you're thinking of. These candlesticks, which are all these different bars that you're seeing multicolored, and I will be throwing this back to beginners and tying it back to the pro. So we're gonna try to make sure everybody's moving along at the same pace. Every one of these bars is a representation of that time frame of the chart you're in, right? So this time frame, and I mentioned this in yesterday's video, and I'm gonna mention it over and over again. Every time you pull up a chart, I want you to take a look at all the information on the chart that's relevant that could be different. In this case, always look at the top left. What time frame are we in? You'll see it here, or if it's marked out on somebody's chart here. What time frame are we in? Okay. And then also, is just chart standard like this, where it's not upside down? Because I've been confused looking at other people's charts when they post them on Twitter sometime, and I'm looking at it like, how the hell? And I realize they have an inverted chart, and that is useful, and we'll cover that in one of the technical analysis courses or lessons later on. But you want to make sure that you're understanding the way the information is laid out, so you can understand all these different cycle dynamics that we're talking about. Now, getting back to what we're talking about here, we're on the 4 hour chart. And so each one of these bars, every bar is representation of 4 hours and how far the price action moved. Now, what this is really representing, and this is what I'm getting at, what this is really representing with these candlesticks on this giant breakout here is the human psychology, the market psychology of what's happening in the market. In this case, the market psychology is saying, okay, we're in agreement. We're going to buy, and this is in the general sense of the market, because you have to remember, anytime the market moves up or the market moves down, that is in both cases, there is a battle of the bulls and the bears here and the bulls and the bears here. The difference is the bulls, meaning the people that are betting or placing their trades expecting the price to go up. That means they are outweighing the number of people and the amount of orders that are coming in. The amount of orders is key. The amount of orders and the number of people that are coming in that are bearish. So this is being outweighed by the bulls. Now, in this case, with this downtrend, looking at something like this has been dominated by the bearish sentiment of the market. This has been dominated by larger or more people combined with larger orders coming in, selling versus buying. Now, along with this, and I went over this in a lot of detail yesterday, but this is going to happen in many streams, because this is relevant in every time you're looking at the market. You have to ask yourself, what is the dynamic between the bulls and the bears? Who's taking the lead? Who's taking advantage of the market psychology? And what I mean by that, and this is important, because of course this downtrend is dominated by the bears obviously winning this battle to the downside. But as you see this market drop, you also see the market makers, large money players, and also just the human psychology of the market taking advantage of this drop. And then you have these relief rallies drop. This was a sort of sideways consolidation. The bottom fell out, found resistance here, which is on a similar trend line that we had previously, and in previous price action. This bounced, This found a rejection, bounce, found a rejection. So what we're having here, and this is going to be ultimately relevant when we talk about when we talk about retraces using Fibonacci tool, using Fibonacci expansion, Fibonacci retracement, which I'll go over in a little bit. This is critical because what happens here with all markets, when this picture this up here being a ball. Okay, I'm actually going to zoom out here. I'm going to come to the 3-day chart, and I want you to, I'm going to hide the 4MA. I want you to imagine a ball, okay? I want you to imagine having a ball, holding the ball just out in front of you, just like that. When you have this ball that's right here, okay? You have a ball. When you drop the ball at some point, unless you're out, even if you're out in space, at some point, in out space, it's going to take a lot longer. But at some point here on Earth, if you drop a ball, at some point it's going to find resistance. Am I right? So when it finds resistance, in this case, if you drop it onto the table or if you drop it onto the floor, depending on the height that you drop it from, gives all the information to that move as to what the bounce is going to be when it bounces. How much momentum it had going into that resistance is going to dictate how much of a bounce you get off that resistance. So in this case, we have this ball and it's fallen. Now it's found resistance, actually found resistance there, but I'm looking more macro right here. Found resistance, and then it bounces up, finds resistance, bounces up. Here, finds resistance. This goes a bit sideways, but it does bounce here. You can't see it because it is zoomed in on 3-day, but this is that is an 18% bounce. But the point I'm trying to make here is we have to take advantage of two things: the velocity and the momentum of every market move. So in this case right here, where we're having this giant pump, what I really want to clarify here, this stream is titled How to Catch a Pump. And what I want to be blatantly honest here, you're not going to catch every single pump, but you can take advantage of every single pump. And here's how and here's why. That's what we're going to be breaking down through this stream today. Okay? If you miss this pump, I want to show you something. I'm going to zoom in here on the 1 hour. Actually, I'm going to come down to the 24-minute. So this price action, okay, so this price action came up, found resistance on previous resistance, and this resistance right here, this red line, and if you get confused when you're looking at your charts ever, this resistance is this downtrend right here, okay? And I had it set up a little janky the other day. I forget why I set it that up. But either way, point being is it found resistance on this level. And when it found resistance on this level, as soon as it broke through here, if you missed this entire move all the way up here, then what you're looking for is the next point of interest on the chart. You want to see where price action has had relevant interest based on past data. That's what all of technical analysis is utilizing past data, which has marked out and mapped the market psychology, and then you can project that onto the future so you can have, and it's not a guarantee, but it gives you some ideas and some relevance of price regions that price may interact with. It may pause, it may pull back, and all those things give you opportunity and they give you signal as to how to engage with it. And that signal always goes back to this market cycle sheet. Because, and this is why I said every time you think about the market cycle, you want to consider the macro, the midterm, and the micro being, let's say, the weekly, the daily, and the 4 hour and below. Okay. And the smaller you get, the more, I don't want to say noise, but the more market cycles you're going to encounter and the more quickly they're going to move through them. The larger the market cycle, the larger the market cycle and the data that you're gathering from that market cycle. For instance, when we're talking about this larger downturn, this downtrend that we have here, these large price action trend lines that we have here, this diagonal here of support and this diagonal here of resistance, these provide us very heavily weighted data as to where likely price interaction is going to happen. And the reason I say that is I drew this price action out here. As soon as these two points hit, I drew a potential ray. An array is when you come in here and you come over here on the left-hand side, and instead of this trend line, you can click on this line, you come to array, and you can select one point, and any other point that you select, as you can see, it draws this ray. And I'm gonna make this brighter so you can see it. Here, I'm gonna make this a solid line. So again, anytime you create a ray, you do this, and it basically projects out into the future. Now, the reason I say that's useful is because you want to have at least 3 points of contact on any time you're creating a horizontal, horizontal trend line, especially a diagonal trend line. And the more touch points you have, the more valid that line is. So in this case here, I'm going to come back to the 3-day. In this case here, when this point happened and this bounced, I would have already put a trend line here, and more likely than not, yeah, I would have put a trend line right here, and then coming out into the future, then when this price bounces, then when this price right here, when this price breaks through this level right here, that is a clear sell point. Now, the reason why this is all relevant to where we're at right now, when we're thinking about a pump, and I'm going to delete some of those markings, okay, is we can utilize technical analysis to identify that a pump is likely. Now, when we're thinking about this, how do we identify this likely? Well, when we're thinking about the cycles, as I mentioned, when we're thinking about cycles, every time we come to the charts, what's my macro? What's my midterm? What's my local? What's my, the micro? Well, this is also relevant to not only TA looking at candlestick patterns, but we can also utilize a wealth of other indicators that can signal what's going on with the charts. Now, before we dive into this is very much more localized. Now, we can look at the 3-day, for instance, and we can see that right here, immediately I can see, and I'm going to, immediately I can see, just because I've been doing this for years, this downward price action you see marked out by this trend line, but we have this strength, and I'm going to make this brighter so you can see it. We have this strength. I'm gonna make this blue. Yeah. So we have this, the relative strength index, which is the weighing the relative strength and buying power and the participants in the market. When you're having, increasing of price, like right here, this is drastic increase, but this is going flat here, showing there's a lack of momentum that's agreeing with the price action momentum. In this case, we're talking about pumps. We have this downward price action. These lows are lower and lower, but look at this massive divergence in the RSI. This is what's known as a bullish divergence, and this is critical. I'm going to do an entire video on this soon. And what this means is, while this price action is falling further and further, the momentum has been falling. This technical signal from the RSI alone, as compared to the price action, is showing this momentum downward is not agreeing with what market participants, what buy orders, what the strength of, people coming in and participating with the market. This is suggesting, hey, there is a shift in gears here, whereas right here, we can see between this point and this point, this is coming downward, but this right here, between these 2 points, is also coming downward. So there's no gear shift there. What we're looking for to identify a pump, so you can take advantage of the pump, and a lot of this has to do, and the number one thing that this has to do with, is patience paired with awareness. You have to be aware. If you're going to be actively trading in this market, at whatever level, you need to be aware, and how aware you need to be is dependent entirely on the time frame that you're trading. If you're trading if you're only trying to catch this big move to this, you're going to buy somewhere in this region here. if you're going to buy somewhere in this region here and you want to sell anywhere in this region here, then your awareness needs to be, I would say, at least on a weekly basis, you're checking in. Now, and that's what's known as a position trader, almost an investor, but not quite. An investor is somebody that buys and is holding for a long period of time. A position trader or even a swing trader, these larger swings on this time frame, you can have a less amount of awareness. You don't need to be in the chart, every 20 minutes or all day long like I am. Now, if you are trying to trade this market and you're trying to trade, throughout the week, and you're trying to catch this move to this move, and you're going to sell here and sell here, buy again here, sell again here. If you're trying to catch every one of these swings on a daily sort of time frame, then you're going to need to be aware of the charts. Otherwise, the data that is available to you is being swallowed up by other people, and that's when you get this parabolic, the start to this small parabolic move right here, and you completely miss it because you're not aware of this large amount of huge RSI divergence that was developing and now I'm going to use one of those quick keys on the chart. I'm going to click on you always need to click off your indicators to use quick keys. Just a quick tip there. Click on the chart. I'm going to press shift, and I'm going to measure this period of time here all the way to here where this bullish divergence formed. And so I'm going to click here. Now I'm going to drag all the way to that point. That was 147 bars, 147 days. Okay. Now you didn't, of course, I was saying, I am still saying you need to be involved in the charts if you are going to be taking advantage of these pumps, especially on a smaller term time frame. If you're trying to trade this, if you're trying to catch this pump to take advantage of this move right here, which is a 18% move. If you're trying to take advantage of these smaller percentage movements, then you're not an investor, you're not a position trader, you are a swing trader and a scalper, okay? So you need to be involved in being aware throughout the day, throughout minimum, at least every other day, just checking in on some of your macro, your midterm, and then your smaller time frame, your 4 hour or below. And then you also need to be aware of what's going on a couple key data points. You need to be aware of what's going on with your RSI, with your MACD, with your and then when you're pulling the trigger, we're going to look at the stochastics, okay? And then of course we can look at money flow. And I'm guessing, I haven't looked at this recently, but I'm guessing there's a divergence on the Chaikin money flow right here as well. It looks like there's not one on that same point with the RSI, but we can see increase or an increase, or I would say actually a decrease in how negative this money flow is right here as opposed to here. And so we can see right here, what this is saying is that there's pressure coming into the market. There's money pressure coming into the market while this price is still falling. Now, what do we see right here? For the first time in a while, we see money flow come up. And then not only does the money flow come up, we also see that the level that money flow comes below this zero line is smaller. The way CryptoFace calls it with his indicators is he calls it an anchor wave and a trigger wave. Where it's very similar on this, where you have a larger wave and then you have a smaller wave, and now look at this, you have a smaller wave, meaning that we're having less interest to the downside, which on the inverse means that there's more interest on the upside. So as we're seeing these bullish divergences flow on the RSI and the money flow here, these are just standard indicators that we can use. And as you can see, it becomes quite noisy on the chart having all these. So there is other means, and I'm actually going to go over some of the stuff we have in the BitLab indicator suite as well that really has signaled a lot of this stuff. But the point is here, you're looking for all these leading indicators. You're looking for data. You're looking almost like when you think of a pump, think of pump as a dish. Think of it as like you're a chef, okay? And in order to make a good meal, you need multiple ingredients, and you need to utilize those ingredients correctly for that meal to be made correctly, not burnt, and then to be devoured. So what we're doing is we're gathering our ingredients. Now, I am going to go back a few chapters here because we are talking very much on this small time frame, catching this pump. But I want to go backwards to that first thing that we talked about, that first cycle, which is the macro, because there was leading indicators that was signifying this coming for quite a bit of time. So what I want to do is I want to come over here and I want to, again, we're seeing this large downtrend, but I have a couple different, okay, here we are. So this is a great person you should follow. It's actually two guys, Stock Money Lizards on Twitter. Make sure you're following them at Stock Money L. There's quite a few scam accounts out there, so follow their correct account. But we could see right here, just looking at, we're talking about the macro. One of the things that people say over and over again, and people always seem to forget it, the 4-year cycle is so important when we're thinking about what's going on with the market and where we're at in the cycle and how to engage where we're at in the macro. Are we supposed to be buying right now, or are we somewhere here and we can be a bit more patient? It's stuff like this. Understanding the 4-year cycle helps you be prepared, especially for these macro pumps, because let's be honest, having a pump on a 15-minute is nice here and there. But the truth is, we want to take advantage of that bottom pump so we can get in to maximize our profits, which is what this is all about. So understanding this 4-year cycle, meaning every time the halving occurs, and what is a halving? The halving is to secure the network, we have miners, and the miners essentially are competing to solve very, very difficult cryptographic algorithms that then once they, whichever miner wins that contract, basically solves that problem, they are able to validate that block, which happens every 10 minutes. And then they get a reward. At this point, it's 6.25 Bitcoin per block mined. So there's 6.25 Bitcoin per block mined, okay? And it's halving every 4 years, meaning every 4 years, that reward for the miners is decreased. And the reason this is important is because this is tied directly to the nature of everything we're fighting right now in world governments and with the US inflation. We're fighting this never-ending money printing. We're fighting this never-ending inflation. We're fighting a lack of clarity about true governance, manageable fiscal governance on our currency that we all basically need to live and survive. So Bitcoin is the answer to that. And there's other crypto projects out there as well that have similar sort of frameworks, but Bitcoin is the penultimate crypto. It's going to be the store of value into the future. There are other there are other assets out there within the crypto ecosystem, Ethereum, Cardano. Go down the list of the top 20. A lot of those are going to be around, but most of these 24,000 or whatever crypto assets that are available, most of those are going to go by the wayside. Bitcoin is the ultimate because of this fixed supply, basically fixed inflation, which will turn into deflation over time because of lost coins. You're never going to be able to recover these coins that were thrown away in landfills. And all this goes to inform where we're at in the market cycle, because this halving cycle has become very obvious that it's become essentially the railroad tracks to how Bitcoin moves forward through time, especially through market cycles. So as we can see, with each halving, we've had essentially a huge pump, a pullback, and a pump. And then post-halving, about a quarter of the way through, massive bear market. Basically, price gets far too speculatively overblown from that hype cycle, which none of us are going to be a part of anymore. We're going to be buying at these levels, at these accumulation zones, because data like this and other data that I'm going to be going through shows us that these are buy zones that we take advantage of. This is the pump we're talking about. How do you capitalize on taking advantage of it, as much of this pump as we can? Because let's be honest, you're not the only one. We are not the only ones. Everybody is so damn thrilled about these green candles that we just got, because we haven't had them in so long. This small, look at this in the scheme of things. I'm gonna delete some of these drawings. But in the scheme of things, look at this massive downtrend. Look how big this red candle was. Look how big these, and look at this small one single candle, and we are thrilled. Why? Because volatility was low, which is another signal which will help us scalp those entering those pumps, and I'll show that in a bit. But in the scheme of things, what we want to take advantage of is anywhere in this moment here, where we can take advantage anywhere in this moment here, so we can have all the profits from here up to here, which is 500% profits versus just taking advantage of the tiny pumps. Now, the reason why this is important is, in order to take advantage, the best advantage of the small pumps, the reason to take advantage of the small pumps is you have to master the macro in order to get the micro. You have to master the foundation of your skill set, of what you're doing, of your emotions is the biggest part of it, of your patience, which is the supporting part of it, and of your awareness and action plan to act on the macro before you're able to deal with the volatility and noise of the smaller time frames. So right now, we are fighting to take advantage of this level right here, this accumulation zone. We're identifying that there's a lot of things out there that are suggesting we're in this zone right here, so we can take advantage of this massive pump. Now, what are some of these other signals? We talked about the halving and the time frame that we're in, but we can also look at short-term holder realized price. Now, this is incredibly important because I'll go over what it is in a moment, but looking at this, we've looked at other things like the 200-day moving average, which has to do with the average amount, the average price, the moving average of where price was at over the last 200 days, okay? So when the price moves up very quickly on a 200-day moving average, I'll find that again in a second, it takes some time to move the price up. It takes a lot of movement. Whereas when you look at something like this, the short-term holder realized price, this is incredible metric to understand, especially if we're of a bullish sentiment or a bearish sentiment. Very similar to the 200-day moving average, but this is tied to the data on chain for all Bitcoin holders out there, and every Bitcoin that is available anywhere on the network that's already been mined, of the 19 million or so that have been mined. What is the average price of only, now this is going to filter this down, of only the short term, the Bitcoin that have moved within the last 155 days. So what does that mean? Well, the short term holder is a sort of term that has been, I want to say sort of, what's the word I'm looking for? Determined to mean by Glassnode, which is a major on-chain data analytics provider. They sort of classify short-term holders, any coin that has been bought or transferred to another holder within the last 155 days. Now, this is extremely important, and this is why I find this this more important than looking at the 200-day moving average, because short-term holders are essentially weak hands in the market. Now, there will be long-term holders that do buy and hold a coin for less than 155 days, but the large majority of people that are short-term holders tend to be known as weak hands. So when you have a disproportionate number of short-term holders in the market, the market movement becomes very weak in terms of having any support whatsoever, because there's a lot more reactivity to price. And the reason this is because if you think of any sort of blow off top, which is essentially a blow off top is anytime you have or even at the top of a bull market like this. This is a rounding top right here. I'm going to double click on this just to bring up the charts. This is a rounding top right here. This is almost a blow off top, not quite, but a blow off top specifically is the top that we had in the 2017 bull run that had this huge hype cycle with so much retail coming in. And I talked about this in yesterday's stream, but this is because you have all these people that believe, like all of us believe in crypto. We believe in Bitcoin. We're buying at these very low levels. We have small position accounts that we're trading to capitalize and accrue more Bitcoin. But for the most part, these levels, are buy levels in terms of the grand scheme of the market. And what happens right here in these levels, this isn't general retail. This isn't, for the most part, if you look at the proportion of people buying right now, it's people that have had awareness of crypto for quite a while. The reason this is important is because there's a sort of a long-term holders mindset and a short-term holders mindset. And long-term holders are able to sustain volatilities in markets. And so what happens is you have long-term holders that sell into the strength of this bull market. What do you mean sell into the strength of this bull market? What that means is they're taking advantage of this hype cycle liquidity that's coming in, this new retail, this hungry, uninformed retail, which all of us were at one point, and sometimes some of us are still when we let our emotions get the best of us. But they're selling into this the short-term holder weakness. They're selling in. So what that means is, as this long-term holder coin, this coin that's been held for 1 year, 5 years, whatever, is sold to, Susie next door. Susie is now bought up here. And now Susie doesn't have the conviction. Susie, whoever Susie is, it could be Lenny, it could be anybody that is a new short-term holder that's new to this ecosystem. These people don't have conviction. And so what you have is weakness. Now here, there's still a lot of strength in the market because this gets bought up. But what you're starting to see here is, especially when you have the huge hype cycle where you have all the news media, oh my God, Bitcoin's at $60,000. Well, now you have all these people taking profits because, golly, this is a lot of profits, and you have short-term holders buying. So now you have a lot of weakness in the market. So now the reason this sort of tangent is important is, I can't believe I just overpronounced important, but hey, we get lost in these things sometimes. I just want to shout out everybody that's here with me on a Saturday. We're learning, we're growing. Wherever you're from, put in where you're from. Put in your born on date. Put in when your first crypto purchase was. I'm curious to see that. But thank you for being with me here at BitLab Academy. I'm trying to do as many streams as I can. It's going to be every Monday through Friday, 10:30 a.m. Eastern Standard Time here on the BitLab YouTube channel. If you are watching on the Hit Network on the restream, shout out to all you guys. Definitely come check us out over here at BitLab Academy. All the information is right. I'm not on the main screen. It is right here. Boom, 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 boom. The reason this is important, and shout out again to everybody here with us on stream. The reason these short-term holder cost basis and realized price, cost basis and realized price are the same way, two different ways of saying the same thing. So the reason this is important is because the short-term holder cost basis, this is reflecting the moving average of basically that pain factor for short-term holders. And so smart money is not going to buy when you just start a downtrend. So when you're just starting a massive downtrend, meaning all these long-term holders, these smart retail people have taken profits into this, they're looking to make money. They're looking for the pain in the market. And we're also looking for some of those long-term holders that have bought or that matriculate into being long-term holders. We're looking for that final capitulation. Boom, right here. Boom, right here, potentially. We don't know specifically yet, but I think this will have been our capitulation. But we're looking as a long-term holder for that best buy price to take advantage of the best pump, which is these massive pumps to the upside. If you're not following this gentleman right here, I'm going to be having him on the channel. He doesn't know it yet. He's a friend of mine in the space, brilliant mind, Caleb Franzen. Caleb Franzen, give him a follow. But we're trying to take advantage of these massive pumps, and this short-term holder cost basis is a moving average of the last time of basically all the short-term holder purchases that have happened, all the Bitcoin that has moved within the last 155 days. So you're basically gauging the weakness or strength of the market based on that weakness factor. So as this short-term holder cost basis, this is critical. When price breaks through this, check this out. Resistance, 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 resistance. Now, when we finally break through it, support, support, support. Now we got a pullback here and there was weakness. We would have gotten out of this, I very much believe, except we had the pandemic, economic world catastrophe, which is what brought us down. But we got bought right back up into the strength of the market. And look at this, support, support, support. Short-term holder cost basis is critical. Now, why am I bringing this up today? I'm talking macro. We're talking about pumps, right? How do I take advantage of a pump? Well, look at this little bitty right here. Look at that price. That price has pushed through short-term holder cost basis. Could this be a good omen? Could this be, well, we don't know. What are we trying to do when trying to take advantage? What are we trying to do when we're trying to take advantage of maximizing our profits and catching the pump? How to catch a pump? That's the title. Well, if we're talking about the most important pump that is in any Bitcoin chart, that is catching the beginning of the parabolic uptrend, catching the beginning of these massive bull trends. And what did I just outline as one of the major catalysts, one of the major signals of what's happening, catching that uptrend? It's this short-term holder cost basis being broken and then being supported, okay? We want to break through and then find support. In this case, break through. We are going to have a pullback, find support. Now, what I want to make sure you understand, and this is all about taking advantage of what's going on in the market. You may miss that moment, the specific moment. Don't beat yourself up. The market very regularly oscillates. It goes back and forth. It's very volatile. You see that? You see this portion right here? Oh my God, I missed this move. Oh my gosh, it comes all the way back, find support on the short-term holder cost basis. That's your entry. We already have the support. We've identified the support. So you miss the move. Well, you can always still maximize your profits by maybe you miss this move because your risk management or your awareness just wasn't there. It's okay. You always have another opportunity. Don't just jump in here because you missed the move. Don't do that. Don't jump in because your fear it's just going to go like this. It never goes up in a straight line. You maximize your profits by being patient, by utilizing these various ingredients that I'm breaking down for you, these various indicators, these various technical data that is available to you. If you look at it for a moment, take everything in that's on this chart. Isn't that what I said? Look at that. Now look at the correlation of what's happening with price with this moving average, with the short-term holder realized price, okay? And break that down and try to identify, okay, if things go up and then come down and go up and come down, oh, I missed it. I'm going to wait for it to have this pullback, find support, and then you find your entry. Now, what I want to point out here, this is beautiful because this is just really reinforces what I'm trying to get through everybody's heads, even my own. I have to remind myself of this all the time. I felt, I always, when something starts moving and I'm not in position, I'm like, I missed a move. But you know what that does? That gives me fuel. That gives me fuel to pay more attention and be ready. If it pushed up, I got my target set. I map out on my chart exactly where my entry is going to be when it pulls back. And I put 2 or 3. It's called laddering. You want to ladder your entries because if you put your only your dream entry, this is my entry, well, it very well may not get hit. Or if it does get hit, it could go lower. So what you do is you practice risk management and good sort of trading and investing habits by laddering your entries so you can make sure at least one gets hit. But if it does go lower, you get a better entry. You don't think, oh man, it went lower. You bet, man, I get an even better entry. And it lowers your average entry. And if it goes lower than that, then you still get to take advantage of all of that. So that's what you want to do. And you do that time and time again. That's how you maximize your profits, through mitigating your risk. Okay. Now, what I want to point out here, this is what I was saying is beautiful. This pushed up and it broke down. Well, what is this? What is this? This is this exact thing right here. That push up was this. There was on the smaller time frame, there was a distribution point or a blow off, and then it broke down and found support. Okay. Now these levels don't necessarily need to be perfectly level. This could be a push up and then pull back, and that's essentially what's going to happen time and time again in Bitcoin. So when we're looking at that short-term holder cost basis, and like right here, we've broken past it. Now, this doesn't necessarily mean that we're absolutely going to moonshot from here. This is why we need to mitigate our risk. Because if we look right here, this pushed up and broke down. We never know if a black swan happens. We never know what's coming in the cards economically, geopolitically, even something, geothermically. We could have a giant sort of electromagnetic pulse that comes from the sun and shuts down half of Europe or shuts down half of the U.S. Electrical grids. Well, that would have a pretty big impact on something that is, basically run and operated through, energy, right? So we need to plan our course of attack with care and consideration about what opportunities are available to us. And then not only what's our contingency A plan, what's your contingency B? So you miss this move. Contingency B is always it tends to be a safer play than the contingency A. Of course, we want this. We always want the lottery, but the contingency B is the planning, the patience, the awareness. That's something all of you have control over. You have control over your planning. You have control over your patience. If you're staring at the chart all day long and you're looking at the 2-minute chart, that's not planning for patience. That's driving yourself mad. Don't do that. I beg you, don't do that. Pick your time frame that you want to trade on, divide it by 4. That's where you find your scalpel to find the entry, but only divide it by 2 or 3, usually about 2, to get a better sort of idea of the interactivity of what's going on. But you say if you're looking at the 4-hour time frame, that's the time frame you want to trade on. Then look at the 4-hour time frame, but then divide that down to the 2-hour time frame for resolution, in terms of you start seeing candlestick patterns forming, giving you an idea if there's losing momentum. If you're just looking at one green candlestick, well, divide that down, divide it down to the 1 hour. You start seeing some movement within that, whether the momentum is increasing or decreasing. And I can show you exactly what I'm talking about on the chart. Where we're at right now, have you missed this move? That's what everybody wants to know. Have you missed this move? Well, we talked about the short-term holder cost basis, and we talked about this downtrend that we just broke through, this downtrend sort of region, which is, plus or minus a few percent on this line. Have you missed this move? Well, I'm looking at the weekly. This is a green candle. That's the only resolution I have on this. Is by resolution, I mean looking deeper, looking at the what's comprising this. What is comprising this move? Let's zoom in. How do we zoom into this candle? You zoom in, you get that resolution by breaking this down. So we're at the weekly. Let's go down to the 3-day. Okay, we see that weekly candle is comprised of some momentum already building. Now let's go down to the daily. Now, this does look like it was increasing momentum. I'm going to move this so we can see. Dang it, you. Okay, so we could see that volume is actually falling. So have you missed the move just based on volume? I would suggest, unless we have we have one day left in the week. I don't know why I was having trouble doing the math. I forgot it was Saturday. We have 1 day left in the week, okay? And volume is falling on over the course. Now, of course, it did increase, but over this last 3 days, volume's starting to fall on this move right here. And not only is volume starting to fall, we see these candles. We see these candles being bigger each time, right? So that time is 2%. This is 5%. This is it's a little bigger than that, but you see my point. The momentum has increased into this. But now we're starting to see a candle with smaller momentum. The candle body, meaning this portion right here, not that little wick that's above it, showing how far price went all the way up to here, but it's pulled back. Now, given you saw how big price movement was yesterday, it was phenomenal. So I'm not calling anything out, but when I'm looking just at the resolution, just with these two things, I'm starting to see right now, if this daily close right here, it would start signaling to me that momentum's starting to lose, because this candle is smaller in size than the candle preceding it. Now, when we zoom in, now we want more resolution. How are we going to interact with this? Are we going to play a pullback? Are we going to look for a retest of this line? Is there going to be a fib retracement? Well, we can come down here. Let's go to the 12-hour. Now, We have 5 hours left on that, so I'm going to go down to the 8 hour. Okay, now we see this. Now I'm going to move this out of the way. Now we see we can have pauses along the way. That's fine. But what I want you to notice is on these pauses, we saw a decrease in volume, meaning that the bears that we're fighting here didn't get much love. Okay, now we see increase in volume again, increased volume, which are these bars across the bottom, increase in volume. Now, this is what's known as a spinning top. A spinning top is, some people call it a bearish candle. I don't necessarily think of that one. I think of a spinning top as a neutral candle. Now, neutral candles in this context can be bearish because we have a bullish sort of trajectory here, a bullish pattern on these candles moving, starting to move in this uptrend like this. But in addition to that, we also see now this candle said, okay, there's quite a bit of indecision here. The question here is going to be, as we've seen, this is kind of indecision. This is spinning top. This can very well just continue up. We can have a continuation. But what we're looking for here is signs and symbols that this is going to pull back and retest, which is what? It's this right here. It's going to pull back, retest, and go up, or it's going to continue and break through like this and then retest and come down. So that's some terrible resolution on that, but you see what I'm saying? It's either going to come back, retest, go up. It's going to pull back, maybe bounce around, retest, and get rejected down. That's what we're trying to find out. On this pump, we missed the very beginning. If you're not in it already, you missed the very 0.001% of it. Don't worry. Be patient. Let your awareness inform you of what to do here. So now what we can do, and we're going to go a little longer than an hour today because I'm just into it. If everybody's okay, give the thumbs up if you're okay with going a little extra time. I want to really continue breaking this down. I might go another 20 or 30 minutes here. So hit the like. Definitely, please hit the like button. Subscribe to the channel. If you haven't yet, tick the little bell. It really helps us grow. We're starting from scratch here. We've grown about 1,000 people in the matter of a week. So let's do it. It's incredible for a new channel. I really appreciate all you. Also, make sure to go follow all these socials. Just calling that out as we do this. And shout out to everybody over at the Hit Network. Now, continuing here. What we're going to do is we're going to zoom in here. Now, what we want to do also, we want to make sure, and shout out to Mitch Shaw. I'll see you later, brother. Shout out to all the mods and everybody that's been tuning in here this first week. Really great week. Really love you all. Appreciate you all sharing this content and subscribing. It really does just tickle my heart. My goal here isn't for me to make money on y'all's backs. My goal here entirely, it's why this is free content, is to give you guys the tools to make money. So let's do that together. Let's keep this positive. Let's keep this going. So let's just keep this going. So what we're doing now, we're going to zoom in. I hate this thing sometimes when the drawing tool stays on. We're going to double click back on this. Now we're going to start looking at some signals. Okay. We're on the 8 hour. We're going to start to look for some signals. Now I'm going to zoom in to smaller resolution. I'm going to come down to the 2 hour. Now, look at this. First thing I see, and this is why I make the RSI much darker. All right. So what we do here, we can see that this is a flat level here, but look at the RSI is really starting to take a beating. Unless we get a strong move up here, we're really starting to take a beating on the RSI, showing the lack of confluence, meaning the lack of agreement of market buyers. This is what divergences are. Lack of agreement with market buyers in price action. Whether that means there's less agreement with the bullish price action while price is going up, meaning you get a bearish divergence, or there's more of an agreement with the bulls, even though price action is going down. So there's pressure coming in. So right now we're seeing that divergence here. Money flow looks like it's a bit flat. The stochastics, which are great for helping find entries, the stochastics are showing essentially what stochastics are. It's similar to the RSI. It's measured differently in terms of the math of the indicator. But what it does, it gives you an advantage of. It's like kind of having. This is a dumbed down way to say it. Very basic. It's like breaking down RSI to a much more simple, much faster moving sort of indicator. It gives you a much quicker reading on what's happening in the charts. So we're seeing a divergence on the stochastics, on the RSI, and then also I don't know if any of you all have used this, but I used to use this a lot. I don't use it anymore because I basically have given every indicator I use up. I use only the BitLab trading stack now because it combines so many different things and gives a very colorful, very deep resolution on what's going on in the market. And I'll go over those after I go over all these indicators that are available to you just here in the indicator section. You can, if you're curious what they are, you can just type these names in here on the left. You can find all these indicators in TradingView. But this is another indicator I do enjoy. It's called the DMI, which is the directional movement indicator. And this is essentially weighing a number of different things, the momentum, the buying pressure, money flow, all this. And really what it's doing is it's exemplifying price action moving towards certain moving averages or away from them. Not like the moving average convergence divergence, more so where's the price momentum taking you? Is it taking you up? Or up or down towards averages? Are you moving in velocity? And so when you have these two, the blue and this orangish, when you have this crossing with the blue under this, that's signifying bearishness, bearish price action direction. So similarly right here, we get this movement right here with the blue is of a more bullish standing, being above, but you see it starting to travel down, meaning you're having some bullish, you're having waning bullish momentum, meaning the bearish momentum is starting to increase, and you see the bearish sort of pressure increasing. So we have the bullish pressure and the bearish pressure, and we're seeing the way they're moving with each other, so that we can have sort of an indication of what direction price is. Are we going to have a breakout? Are things in agreement? And so what we have right here, there's a little bit of a confusion, but what I'm looking at right here, as this crosses, this would be the signal line. As this crosses, we're getting a bit of a signal of movement. So what I'm going to do here is I'm going to press Option V, which puts a vertical line, and we're going to look at the chart and see what happened with price action right there. Now we're going to zoom out. Let's go to the 8-hour. Look at that. I zoomed in on resolution with my DMI, noticing I saw, earlier we were looking at the bullish divergences showing a potential uptrend pump coming. We're trying to catch a pump. And then I zoomed into very small resolution. Remember, I was on the 3-cycle theory. I was looking at the macro, the midterm, and then the micro, okay? I got the image. I got the general landscape of my battlefield with the macro. I zoomed in to the midterm time frame, the 8-hour, the daily, the 8-hour, the 4-hour, and I noticed those massive sort of divergences that were earlier, that were leading up to this, suggesting that the bulls were coming in. There's some pressure building. Volatility had been decreasing. That's another one. Let me look at that. Volatility, you can notice looking at Bollinger Bands. Bollinger Bands are essentially, you have a 20 simple moving average in the middle, and then you have 2 standard deviations above and below it, which basically represent the band, this cloud that the price action is within, represents the average of 95% of all price action that was within the last 20 period of this. So essentially, break it all down. When this is very tight, it's very low volatility. When this, breaks out of this, that means there's a huge shift in trend, and also there's a huge explosion in volatility in this market. Now, similarly, right here, look how tight these 2 blue bands are. Very, very tight. And then as soon as we broke out, as soon as we broke out of that, boom, rocket ship to the upside. So the point I was trying to make with this is we're utilizing these 3-cycle theories, looking at the three time frame cycles. You know, you're looking at the macro, the midterm, and then the micro, because the macro gave us a landscape, gave us our battlefield. The midterm gave us, okay, now we're starting to put on our armor. We're starting to grab our shields. We're starting to, you know, get our entries. You know, you're trying to figure out where your levels are. Where, you know, what level am I going to find my entry on? And then the scalpel, it comes with that micro, smaller term time frame. Now, when we want to do that, and by the way, this all goes to each one of your strategies. You need to define what your risk management, what your risk tolerance is, meaning how much you're willing to lose, what your time horizon is, what time frame are you trading on? Are you trading on, and you could have multiple time frames. You could have a long-term holder bag. You could have a short-term trading, short-term trading portfolio. But you need to define what these different variables are, because it's going to affect how you trade, what you trade, and the amounts that you're allocating to what you're doing. And I'm going to be breaking all that down in future videos. Don't worry, but start asking yourself these questions, because, for instance, this pump right here, some people are beating themselves up over because they missed that pump. Well, this is just a trader's pump. This isn't, you know, long-term time frame. This pump right here, or this pump right here. Now, we all want to have that bottom dollar entry. But the truth is, when you think about risk management and risk tolerance and, your time allocation, missing a bottom, for instance, missing this, waiting for it to come back, and now showing that you have support, now you can alleviate so much dramatic anxiety from your heart. So you don't need to catch the penultimate bottom and exact moment of every move. Let this move right here that we just witnessed yesterday, let this move be a signal for you to catch the monster move. That is the sauce for today's trades. Really, that is the sauce. Patience, awareness, planning, and being able to have the ability to, and awareness, again, not just awareness of what's happening in the charts, but the awareness that the price pushes up and it will pull back. So in this case right here, we did break this, intermediary trend line, and we were kind of, depending on how you draw the trend line, and I'm going to show you why, depending on how you draw this trend line, let me clean up the chart. This trend line could be potentially incorrect. I did draw it in a flash yesterday. So I'm going to go like that. So now we have a zone about where we're at on the chart. So we did push up, but look at that. I just drew that just from the two major peaks, and I'm going to delete this. And look at that. We found resistance right here. Pause. Look at that magic. Also right here, this intermediary. Finding resistance. So this is signaling that the bulls are scraping their hooves. They're getting ready, okay? Now, what we're looking for right here is a potential retrace if this gets rejected. And so I'm going to take my fib over here on the left. I'm going to take from the top right here, and I'm going to pull down here and just show this price came all the way down to here. The price came from 21, it came much higher than that, 21.8 or something, wherever it was, and came all the way down to 20,249, okay? But it's pushed up, and it's fighting right here with this golden pocket, which is a critical function with using the Fibonacci, thinking about retracements, where the price is going. And this goes back to what I was illustrating earlier, and that was actually a setup for this. When we're talking about dropping the ball drops, it's going to bounce, and it's going to bounce at essentially, I don't want to say a fixed amount, but a relatively fixed amount. When you drop the ball, it's going to bounce every time you drop a tennis ball. If you don't put any other force on it, anytime you drop a tennis ball, it's going to bounce to relatively the same height within a very small margin of error. If you drop it, every time. Now, if you drop it, and when you drop it, there's also a fan on the ground blowing up, on sometimes and not on other times. When the fan's on, that ball will bounce higher. Now, if you turn the fan up and put more pressure, more support under that, then maybe it's a 200-mile-an-hour fan. Maybe that you drop the ball, you turn the fan on, and then the ball just gets blown up. So what I'm talking about here, this sounds like nonsense. It is not. I'll tell you why. The price action moves in the same way because it works with human psychology. When the price falls, in this case, we're going to zoom in. We're going to zoom in here. We're going to go to the 24-minute. Yeah. So price. So it's just kind of falling around. Actually, you know what? I'm going to come all the way back over here to. Here we go. There's a perfect example. So we're going to take from the top to the bottom. Now I want you to notice something. When I drag this across, what do you see? What does that line up with? Say you've missed this short, okay? You missed this short, okay? Maybe you bought a long. Now you have to wonder, especially with this having rolled over, this price action showing waning momentum at these price levels. Price is rebounding. Are we going to go to new all-time high? I know most people last year, including me, thought we were. And we were missing the signals. We were missing the damn basics. That's why I'm here with you. I'm reminding myself as well. We got to look at the basics. So this bounces, and look at this rejection right at the golden pocket. Now, the golden pocket is the 61.8, between the 61.8 and the 6.5, or between the 61.8 and the 6.6, right in that region. Just basically right around the 61.8 retracement, meaning this came back 61.8, or the 618 refers to 61.8%. This came back, found that, got rejected, okay? And now I want you to notice the next thing. Where did this bounce? This is why the charting, and I'm going to actually do an expanded sort of part 2 of yesterday's lesson with charting and market cycles, so we can identify this more clearly. But what I did tell you was we can do option J, right? So we had a high here. When I was trading this previously, I had a very messy chart because what I would do, this bounce, I put an Alt J right there. That gives me a level. I put an Alt J right there. Put an Alt J at the bottom. And then what happens is, look at this. This bounces. We did our fib retracement. Where is this going to go? Can I take a short somewhere, or where should I take profits from this long if I'm just doing position, short-term position trading or swing trading? Well, then we buy this position here. How do we identify where to take those profits? Well, we bought this right here. We got the long. Now we're looking at this 61.8 retracement. We take the short, or, we take profits on this long. And then with that price action reset, and then how does it reset? Well, you have a pullback, which is what we're looking for on today's chart right now. We're looking for this to play out. We're looking for this breakout, pullback, which bounce right at this previous high. Look at that. It's magic how these highs and lows. If you do nothing else on your charts, go on a 3-day chart and just do option J at highs and lows for throughout the chart. And you'll look at that. You see this? Highs and lows will always indicate, not always, there will be a very high likelihood of indicating price action in future. So these previous price actions, all I did was mark here this low, this sort of region here. This is one of the reasons why people were thinking we were going to go lower, because of this price action here. So price action will do that. And so similarly, what we want to do right here, and this is going to be the last point I'm going to make, I'm going to wrap it up here, just a few moments. Please go ahead and hit that like button. Subscribe. I really appreciate you all being here. I really appreciate sharing all this with you. How can you join the Discord? I saw somebody post that. I will share the link here before we end again. But also, you can also find more information on that at bitlabacademy.com. But I'll be taking tomorrow off. I got to spend some time with my wife. She just had her teeth, 2 wisdom teeth pulled. So I'm just yakking away right now while she's downstairs healing. But you guys are a family as well in your community. I want to build that with you. But please like and subscribe, help build this channel, share the news, follow us over at all these socials here at the bottom, and follow me, of course, also at Kelly Kellum, which you can find right there. Boom, boom, boom. I love being here with you guys, and thank you for being along with me on this journey. But now, to wrap all this up, what we want to do, where are we going from here? How do we know if we catch this? Sort of this massive trend that I think and I hope that we are starting, but. And this is why I don't think you've missed this move. And this is why I did a video today about how to catch the pump, because I do think it's still very likely that we are going to test down. Where is that going to be? How do we take advantage of it? But what did I say? I'm going to be drilling this through your head. You guys have to remember, I'm ex-military. I used to be in the Air Force. I've done a lot of different training. And so one of the things I used to hate when I was in basic training was how repetitive drill sergeants were. And especially through, your training of your profession, everything becomes so repetitive because they want it to become second nature to you. Your trading needs to be second nature, because if it's not, then you're going to trade emotionally, and that will wreck you every time. So getting back to this, what do? We start with our 3-cycle strategy. What is it? 3 cycles, our macro, our midterm, and our micro. So we looked at our macro, we looked at our midterm. Now we're trying to figure out, with this pump, how do we take advantage of this? So there's a lot of people taking profits here. There's a lot of people shorting here because this was a major downtrend, and we're in this massive sort of zone of resistance, as well as a completely enduring bearish market that we've had the entirety of 2022. That stuff, that doesn't just wear off. This is, what did I say all this price action was? Price action is a representation of the psychology of all market participants in that asset class. So if the psychology is involved, you know how psycho all of us are. You know how psycho. We are tied to our emotions. We are. It takes a while if you get hurt, if you lose trust, for that to come back. And so that long-term bullish divergence that I showed you on this time frame right here, where we had massive bullish divergence, and now we've done all this stuff with the standard indicators. I'm going to go ahead and pull up the Big Daddy. I'm going to pull up the BitLab market intelligence. I'm going to break all this down over a course of a number of videos. I'm not going to only focus on this, because I want everybody to have access to everything in terms of using free indicators as well as this. But this is what I'm using right now. We already outlined with RSI and money flow and the stochastics and other things, this massive bullish divergence that we had right here, and coming in right here at these levels. That signified likely a move was coming. So what we're looking in right here, where we're seeing that with this, we're seeing a red sort of overheated significant movement, which indicates that there's a likely topping and coming in this short-term trend. And why do I say topping? Well, the significant movement indicator, which is part of this BitLab suite, essentially is weighing money flow, stochastics, RSI, when things are in severely overbought or severely oversold signals. But a number of these indicators all signaling at the same time. It's when those get out of the norms collectively, showing a confluence. So you're already, just with this indicator, getting a confluence of indicators. You're seeing an overheated nature of what's going on right now with the price action at this level. And that's to be expected, because we are at this massive, massive downtrend that we've been in since November 9th of 2021. So over a year now, a year and a couple months. I'm going to unauto this so I can zoom into this a bit. We're fighting this level. And now the extrema showing, like, when volatility, which is, for me, this is phenomenal. Do you see these moves right here? The fact that the extrema isn't sticking out of these bars like this, outside of this cloud, I would have expected, looking at this, that this would have been far outside the cloud, because these were highly volatile movements. But this indicator is suggesting that within the context of the different indicators that this is reading, in terms of how quick momentum is moving, volatility, expansion, RSI as well, all these things, the extreme nature of moves, this is saying that this was actually fairly in context, which is actually, for me, an incredibly bullish symbol based on everything that's happened to have this volatile move and it being within the extreme. And now we are on the 3-day. So let's go ahead and what do we do? Macro, midterm, micro. So let's, again, we're coming down. We're going to go all the way down to the 1 hour. Now, because we are coming short on time, we're going to wrap out in 10 minutes. We were looking at what we're going to do. Now we were finding resistance. We could see, now this is what I mean by deeper resolution. I'm going to delete this Fibonacci. This is on the 3-day chart. We just saw one green bar pressing his head against this trend line. But we zoom in down, we came all the way down, and I want you to do it methodically. Don't go from the 3-day to the 1 hour. Make sure you look at the weekly, the daily, look at the 12 or 8 hour, the 4 hour. Just really get a picture of the different pictures that are being presented on the charts, because sometimes you'll see different opportunities on different charts. But now we're coming into this sharper resolution, because, look, 12 hour, no resolution. 1 hour, I've got 12 hours of candle of resolution. I can see the mentality. I can see the psychology of the market participants right here. There's neutrality. Is this bullish or bearish? Well, looking at the context of the market, we're up against resistance, which gives us a little bit of a bearish bias. Also noting that we've been in a bearish downtrend for 13 months, okay? So the bears do have a bit in their cap here. We blasted up rather quickly, and we are holding here. So this wasn't just a stiff rejection. So this kind of puts a feather in the cap of the bulls. So we're kind of neutral right now, right? So long-term downtrend, we're fighting at this level. Now, what are we seeing in terms of what's happening on the charts? Well, on the hidden volume is incredibly important. We're seeing actually a little bit of a bearish divergence, which you see this line right here. This is just suggesting, and I can actually pull it up on the volume as well. This is suggesting that we could see, look at all this volume coming into this. Now there's no volume really bullish or bearish. It's very, very neutral at this level. So we're in a little bit of a gray area. And it's also, look at that on the significant movement, a little bit of a gray area, meaning that they're not overbought or oversold. There's no extreme signal here. Even with this small attempt down, though, we can see right here, this attempt to push down, this also found support. These lines right here are EMA. It's an EMA ribbon built into the BitLab market intelligence indicator. If anybody wants these indicators at all, you can find them over at bitlabacademy.com. Come over here to indicators, and you can find all the information on those. They're still very heavily discounted from what they would be normally. Where are we at? Oh, okay. And they really tie together some of the most professional sort of I would say, let me take out the word professional, more advanced, sort of combines a lot of different indicators and gives you very, very highly targeted sort of signals. You just need to utilize them to find your confluence point. So we are seeing neutrality here in the candles moving across this resistance level. We did see a little bit of an attempt by the bears to reject, but we have support here on the EMA ribbon, which is bullish that this didn't just fall through. And we have this extrema. See, with this move, we didn't get out of the extreme, but with this small down move, that bearish move was extreme to the downside, meaning I think of these moves as almost like a slingshot. So to the downside, that's a slingshot back up. To the upside, that's a slingshot back down, as you can see playing out right here, back to the downside, right here, back to the upside. So I'm looking at this very, very patiently. And my strategy is to have a bit of a stop loss below, let's see, I'm going to go to the 2 hour, go back to the auto. Now, where are we at here? Okay, we have levels here. So my stop loss is going to be just below this support line. Actually, you know what? Let's see. I'm going to look at this level right here is fairly wide. So my stop loss would be somewhere in this region here. Right. Where's my? Oh, it's here. Sorry. Would be somewhere in this region here, and I would ladder it. I wouldn't do all of it. I wouldn't take everything out, but I would take a very small amount here, and then once we broke below this EMA ribbon, that would kind of do it for me. But I'm actually taking this. I'm not suggesting you do. I'm taking this rather bullishly and looking at the context of all these major divergences. So I'm actually looking, rather than setting stop losses at these levels, I'm looking this as the advantage to take advantage of what's happening moving forward, with looking for catching this move right here all the way up. So I'm layering. What I'm doing right now is I'm layering my entries in. So any level that comes down, I'm actually, rather than doing stop losses, I'm layering in to take advantage of this pump, because this pump will retrace at some point. It will either do a small retrace here and test resilience, or what I'd really like to see is for the price action to take advantage of the bulls really kind of pushing through here, which very well could happen on the weekend, because we have lower liquidity on the weekend, because institutional players are not as advanced here in trading on the weekend, because they're not sitting at their desks. They still operate on more traditional hours. So any move that does happen, I actually hope that it happens on Monday rather than between now and tomorrow at 7 p.m. because anything that happens between now and then will create a gap. If the price moves up, all the way, say another up to $23,000, which I don't think it will, but let's say we get a push up anywhere in here between now and then. When the market opens, we're going to have a large gap to fill, but that also could provide you an opportunity, because the gap, meaning what's happening with the CME futures, Bitcoin CME futures, they don't trade on the weekends, but they open again, I think it's 7 o'clock on Sunday night. So anywhere the price action travels that hasn't been traveled before, in terms of right here, if this moves up between now and then, there's going to be a gap that the price will have to come back, not have to, but very likely come back and fill. So if this shows a lot of resilience here, and then market opens on Sunday at 7 p.m., there's two likelihoods that will happen. One, the price is going to, the buyers are going to come in and see that the retail bulls didn't have what it takes, and so they're going to take profits at this level and sell and push down. In which case, I'm going to be laddering my entries. Because I am convicted on this market, man. I'm very safely managed. I hope you have very safe diversification within your trading strategy and how your portfolio is allocated and your stop losses. None of this is financial advice. I'm demonstrating my process in the market so that you can gain from my years of experience and formulate your own strategy. But the other thing I wanted to say is, the other thing that could happen here, which actually I think would be quite bullish, is if we do get this push up, the bulls do sort of take over, there will be a gap that's formed, and then what you can take advantage of that, knowing that gap at some point likely will be filled relatively soon. So right now, what we're trying to do is take advantage of this short-term holder cost basis, this data showing that we're very well testing the very start of a new massive uptrend that you could take advantage of catching this pump. You don't need to worry about just aping in because you missed it. That small, tiny pump you did not miss. The point of these streams is for all of us, beginners and pros, to remind ourselves of patience, perseverance, encouragement to everybody within the community, and, to let the trades come to you, because once this finds support, once this does break through with conviction, which it's already poking its head through, and then come back through and find support, it's rocket launch time. It's conviction. We're waiting for these conviction signals. I'm not saying don't be excited about the small pump. You can start layering in. You can start doing whatever it is that's within your strategy, but take advantage of patience, and you'll see that when this market does push up, which I'm so excited about, look for those opportunities when it pulls back and finds support on these sorts of levels. And when we have stuff like this with the Puel multiple, which is a bullish, it's an on-chain metric demonstrating demonstrating what's going on with the miners and, with the miner profitability and how many miners are on. And we see every time it's in these levels, it's at the start of these massive uptrends. And we've been in this level for some time. So that's quite a bullish divergence. In addition to that, I want to point out another free tool you can use. Go to lookintobitcoin.com. You can come up here to charts, and there's a number of different charts you can utilize. But I want you to just notice 1+ year holders rolling over into uptrends, rolling over uptrend, rolling over uptrend, rolling over uptrend. And look at this. We've been stagnating. We've been having to get the bad taste out of our mouth from Celsius and BlockFi and Three Arrows Capital and FTX. Somehow it was all caused by FTX. But think about it. All those companies had bad business practices as well. They had bad risk management. So was it really from FTX? Maybe FTX just shined a light on it, right? So we have to get the bad taste out of our mouth, but we're starting to see these signals to be prepared so that we could take advantage of every market cycle, meaning the macro, the midterm, and the micro. And that's, I think, all I have for you today. I really appreciate all of you. I love, building a community that's rooted in positivity and encouragement, and sharing our knowledge. If I can help you save, if you grow, $50,000 in 6 months for the first time in your life, and I can prevent you from losing that, like I did with my first 70,000. If I can pass the torch down a little bit, and also, you all ask questions, share some of your thoughts, post comments down below when the stream's over. Watch the videos that follow these. All these videos are meant, yes, they're very tied in. I'm trying to tie them in with what's going on in the daily aspect, but I'm going through multiple time frames on historical examples. All these videos are meant to be evergreen, to be rewatched as many times as you need to, whether we're in a bull market or a bear market, whatever. All these sort of practices are meant to help you engage with having a profitable investment and trading strategy. But that's all I have for you today. Please make sure you hit that subscription button, hit that like button down below, share these videos with your friends, share these, orange pill people. I'm trying to slowly walk people through different indicators, different strategies, definitions of things. I'm not trying to just be high level to where it sounds like you're listening to a foreign language. I'm trying to be a community member and a family member to you. I'm trying to, just really build this community with something special, and all of you are part of that. Big love to all of you. Thank you so much to Hit Network. If you're watching on that channel, come give us a follow at all these socials down below. And everybody, if you haven't checked out Hit Network yet, definitely go check out Hit Network. I'll share that as well. Big love to everybody. Have a wonderful weekend. Enjoy these pumps. Protect yourself. Don't get too excited. Think smart. Over and out. I'll see you later. Adios, muchachos.